Okay, so now let's speak about exactly which are the rules of this strategy. But first, okay, before we speak about the rules, there's one thing that I want to speak about, okay? Because the point is that is this strategy actually simpler than the strategies that we have traded up to now, or is it more difficult? So it is way simpler, okay? The strategy is extremely simple. As you have seen, there are not many rules, and we will now speak about exactly which one they are. So all the people that have been trading with me for more than 1 year, I'm sure that you will be able to apply that basically almost immediately, and you will understand everything immediately and immediately start applying it correctly. People that have been with me for less than 1 year, anyway, it will take some months because I mean you're new in general, so it will take obviously some time. So for the old guys, no worries guys, this will be super easy peasy for you guys. And for people that have been for me for just a few months, then guys, you have to put in the work and backtest a lot, because basically you're new in general. So you have to actually learn how to identify structure, learn how to read the market in general. Okay, no, it's not about which strategy it is, it's about you don't have the skill at all when it comes to the market. So you first have to get the skill, because probably you will make mistakes when it comes to structure, etc. But for the guys that have been with me for some time, more than 1 year, guys, this will be super easy for you guys. It's way easier than the ICI, the WM, and TLCTL, which are already easy, but this is way easier. And you will now see exactly why. The point is that first of all, we only use 2 time frames, okay? There's only the first rule. Okay, let's start from the rules and see why it is simpler. So rule number 1, clear impulse to the upside on the 1 hour time frame. So what does it mean? It means that the direction is taken only on the 1 hour time frame. Now, what do we mean by clear impulse? Okay, I want to try to make this as straightforward as possible. What do we mean by clear impulse? We mean that we need to see in the market a movement either to the upside or to the downside. That is, if this is the situation in the market, we want to see a strong push to the upside, almost vertical, that breaks above the previous high. Okay, that is a clear impulse. Or a movement in the market that is very strong, almost vertical to the downside, that breaks below the previous low. Then the second thing, what do we want to see? We want to see a clear, slow retracement, at least to the 382 on the 1 hour time frame. What does it mean? It means that the retracement after the move, okay, we see a clear impulse to the upside that creates a higher high that is almost vertical. After that, what do we want to see? We want to see a slow movement to the downside, okay, slow corrective movement. Now, why am I saying this? I'm saying this because, okay, when you see a strong impulse in the market, okay, very strong impulse, you want to see the correction be slow, and then you want to see the next impulse to the upside, right? You don't want to see something like this and then just straight back down, okay? You want to see first a very strong impulse that creates a higher high, slow correction, at least to the 382 of the Fibonacci taken on the 1 hour time frame, meaning that, as you already know from the rules of how we approach trading, right? If you want information on this retracement, how do you take your Fibonacci? You take it from the low to the high of the impulse. We will see this dozens of times in live market situations with all the backtesting that we will do with the strategy, so no worries. But it's pretty simple, right? We want information on this retracement. We take our Fibonacci from the low to the high of the impulse on the 1 hour time frame. Okay, very straightforward. So we need a clear impulse that creates a higher high, almost vertical movement, and we need a slow retracement, at least to the 382 of the Fibonacci taken from the low to the high. Extremely straightforward. Then, what is the third rule? Now, on the third rule is that on the 15 minutes time frame, EMAs must come very close, or even better, cut to the opposite side. Now, when it comes to the EMAs, what do I mean? It's the exact same indicators that we use for the other strategies, okay? The 10 and 20 EMAs. We use always 10 and 20 and the exact same settings of the Maki that we have always used. Everything is the same as the ICI strategy, okay? But we're shifting time frames. We're adding this rule that the EMAs must come very close, or even better, cut to the opposite side. What does it mean? It means that first of all, you identify the strong impulse to the upside. Now that you have identified the strong impulse to the upside, you have to wait for the retracement. After you see a retracement, at least to the 382 of the Fibonacci, taken from the low to the high of the impulse, what do? You go down on the 15-minute time frame. So direction, you have taken it on the 1 hour time frame. Now you go down on a 15 minutes time frame and you go and check. Is the 10 EMA close to the 20 EMA, or is there still distance? And we will now go on live market situations, obviously, and see that. But it's important that they must come very close, or even better, during this retracement. If the 10 EMA cuts below the 20, it's even better, okay? So even better, cut to the opposite side. Perfect. Up to now, everything is clear, super straightforward. Rule number 4. On the 15-minute time frame, we must then wait for the environment of the market to change back to our side, if it did change. So what does it mean? We just said that EMAs must go very close, or even best, cut to the downside. It doesn't really matter what happens with the MACD, okay, if it remains bullish all the time or if it goes bearish. But what is extremely important is that the EMAs, after they have come close or cut, what happens? That then they have to shift back to the upside, okay? EMAs must cut back to the upside, and the MACD obviously must be bullish if we're looking for a buy setup, or bearish and the EMAs cut for short in a bearish setup, right? Exactly as we have always done, guys, exactly the same. 5th rule on the 15 minutes time frame, after we enter after a break and retest of structure. So we wait for the impulse, and we know that the market is supposed to go to the upside. We wait for a slow retracement on the 1 hour time frame. Perfect. We go down on the 15 minutes. We check, okay, have the EMAs gone close, or even better, cut for short? If yes, perfect. If not, we have to wait. After that happens, we have to wait for the EMAs to go back to the upside, or basically, and anyway, for the environment of the market to be bullish and the market to break the structure to the upside in this case, right? After the break of structure to the upside, what do? We can enter on the retest of the structure. Stop loss is below the previous low, and take profit is at the -27, exactly as we do for the ICI strategy. So we will simply take our Fibonacci from the low to the high of the retracement and identify the -27, okay? Everything is exactly the same as the ICI. We just added that rule. We obviously changed time frames, and you will see how effective this actually is. And the 6th rule is that the risk to reward must be at least a 1 to 2, okay? So up to now, this is very straightforward, right? Recapping it one last time, okay? And then we go and see a couple of examples so you understand clearly all the rules. Obviously, you can go back in the video and take a screenshot of the rules, print them, do whatever you want. But they're extremely straightforward, as you can see. They're very similar to the ICI strategy. I will recap them one last time. Vote for a bullish and bearish price action. Then we will see a couple of examples, and then we can start with the sessions below. There will be all backtesting sessions showing you exactly how to apply the strategy. So let's start from a bullish situation, okay? First of all, we already said it. Rule number 1, clear impulse to the upside on the 1 hour time frame. In this case, obviously, I'm taking a bullish setup, but it's exactly the same for a bearish setup. So clear impulse to the upside on the 1 hour time frame. Then what? We want to see a clear and slow retracement, at least to the 382 of the Fibonacci, taken from the low to the high of the impulse, okay? Now, as soon as the market on the 1 hour time frame hits the 382, what do? We go down on the 15 minutes time frame, okay? We go down on the 15 minutes time frame, and we do what? We check if the EMAs must come very close, or even better cut to the opposite side. So is the 10 EMA very close to the 20, or even better, is the 10 EMA below the 20? If yes, perfect. If not, we just continue to monitor, and we have to wait for that to happen. Then after it happens, or if it has already happened, what do? Then we have to wait again, because at that point the environment is shifted to the downside, or the market is anyway below structure. Then what do we have to wait for? On the 15 minutes for the market to break structure back to the upside. As soon as on the 15 minutes the market will break structure back to the upside, we have to obviously wait for the EMAs to be bullish, the MACD to be bullish. As soon as that happens, we can take a nice buy limit on the retest of the structure, stop loss below the low as the rules say, and take profit where? Take profit, we will just adjust our Fibonacci on the 1 hour time frame from the low to the high of the retracement, and we will identify the -27 as our upside target. Everything is extremely straightforward, and the exact same thing applies for a bearish setup. We want to see a strong impulse to the downside that creates a lower low. Then we want to see a slow retracement, at least to the 382 of the Fibonacci, taken from the high to the low of the impulse. Then, after the market retraces to the 382, what do we have to do? We have to go on the 15 minutes time frame and check what we have to check, that the 10 EMA is close to the 20, or even better, that the 10 EMA is above the 20. After that, what do we have to do? We have to wait for a break of structure to the downside. We have to wait for the 10 EMA to be back below the 20 EMA, and the MACD to go below the 0, or if it already was below the 0, then perfect. At that point, we can take our sell limit and at the retest of structure, stop loss above the high, and take profit where? Simple Fibonacci from the high of the retracement to the low of the retracement, and the -27 is our downside target. Okay, very straightforward. Only one time frame for direction, one time frame for entry, and simply very simple rules when it comes to entry, stop loss, take profit, and conditions for entry. So just a couple of examples here that I want to share with you before we go straight in the backtesting sessions, that just to basically make this clearly stick in your mind. So this, okay, is a crude oil, okay, the setup that I took a Friday on crude oil using exactly this strategy. So let's walk straight into it, okay? What did we have when I actually entered, okay? What did we have? We had a pretty nice impulse. The market created a lower low. The previous low was here. The market created a lower low, went for a nice retracement with deceleration, retesting also previous structure, but that is not mandatory. Okay, it's nice deceleration here. And then at that point, the market had retraced at least the 382, right? If we take our Fibonacci from the high to the low, the market, as you can see, had retraced all the way up to the 0.618. So way more than 382, then perfect. What do we have to do? We have to go on the 15 minutes time frame and check for what? We have to check, is the 10 EMA above the 20, and at least did they go near? And the simple answer is yes. Not only they went near, but the 10 EMA actually cut above the 20. And now what do we have to wait for? We have to wait for the 10 EMA to go back below the 20, and also for the MACD to go back below the 0. Now the MACD has already went below the 0, as you can see. The blue line already went back below the 0. We just have to wait for the market to break this structure to the downside, and if the market will break this structure to the downside, then what will happen? The EMAs will cut for short, the MACD is already below the 0, then what we can do on the retest of this previous support that will be then turn resistance, we can take a nice short, stop loss will be protected by the structure, and take profit will be where? We already said it, right? We already know where our take profit will be, We already know where our take profit will be, right? On the 1 hour time frame, as we said, we will just take our Fibonacci from the high to the low of the retracement, and we will be targeting the -27. Exactly, straightforward as we said, right? So what happened next? The market broke the structure to the downside. The high is here. We can take our sell limit at the previous support turn resistance. Stop loss is above the high. Take profit, we already said it. And the market went for a clear retest of the structure level as we wanted to see it. And then the market made a nice consolidation period, a little bit of drawdown, but then overall nice melting to the downside to my overall take profit. And this was an intraday, because every candle here is 15 minutes, intraday 1 to 3.96 risk reward. Very, very massive. Beautiful setup. This was just this Friday, okay? Last time that I could trade the strategy. And this was a nice streak, okay? This was a nice winning streak that I just had here on AUD JPY. These are all the same, all valid setups. If we go and see basically what was the situation here from a 1 hour perspective, let's start basically from the first one. What did we have? We had a nice impulse here, okay? Nice impulse to the upside from this low to this high, creating a higher high. Previous high was here, creating a higher high. Nice retracement, okay, with deceleration, exactly as we wanted. Nice slow retracement. And on the 4 hour time frame, how did we enter? As soon as the market shifted back to the upside. But had the EMAs come close? Absolutely. Look, very, very close, okay? Almost cut for short, okay? Almost cut for short. And that is exactly what you want to see. You want to see them very close. Doesn't matter if they actually cut or if they just go close to cutting. When it comes to the MACD, in this case, it just remained bullish all the time. So perfect. We have previous resistance here, turn support at this level. The market broke back above. And as soon as the market basically breaks structure, we can enter. And obviously we can put our stop loss protected by structure and take profit. Where? Take profit at the -27 of the Fibonacci, taken from the low to the high, right? Nice, beautiful setup to the upside. Exact same concept for the other one. Okay, the market created a very nice impulse here to the upside on the 1 hour, creating a higher high. Nice slow retracement. Then what happened at that point? After a slow retracement, at least to the 382, you go down on the 15 minutes time frame and you check for what? You want to check for the EMAs that they must be very close. In this case, they actually also cut for short here, okay? Minor cut for short. The MACD never went below the zero. Then the market broke above structure. On the retest of the structure, you can take a nice long, stop loss below the low, take profit where? -27 of the Fibonacci, taken from the low to the high of the retracement. Then next setup, what do you have on the daily time frame? You have a clear impulse. Sorry, not on the daily, obviously, I mean on the 4 hour, on the 1 hour, clear impulse to the upside, slow retracement. And what you want to see? You want to see the next push up. This retracement is obviously more than the 382. So you go down on the 15-minute time frame and you have to wait until the EMAs go very near, or even better, cut for short. The EMAs here cut for short. In this case, also the MACD went back below the zero. Then the market broke back above the structure. EMAs cut for back for long. MACD went back above the zero. On the retest of this previous resistance here, turn support to this area. We can take a nice long, stop loss below the structure, take profit where? -27 of the Fibonacci, taken from the low to the high. This is a very, very powerful setup, okay? It provides a lot of opportunities every single day with high risk to reward. And yes, also the win rate is high, so we can be trading it also with a 1-to-2 risk to reward, as you already know from the rules, no problem. So now you know exactly the rules. As you have seen, it's very, very straightforward. If you have been trading with me for more than 1 year, it will be extremely simple for you to apply it. You don't even need to do the backtesting. If you're new, then you're new in general to trading. So you're not good in identifying structure. You're not good in general to reading the market. So what are you supposed to be doing? You're supposed to study before you actually start applying it, because this is obviously a day trading strategy. So everything will happen a lot quicker. So obviously, now that you know the crazy strategy that you have, it's important that you know how to apply it and you learn to actually read the market. And this is a strategy that if you master it, it will take time. If you're new, it will take time, but once you master it, this will continuously make you money for the rest of your life. So it's definitely worth to put in the effort and actually backtest it. I will obviously be providing a lot of backtesting sessions so that basically you will understand everything, plus a new video every day to make you sure that you master the strategies. And obviously, yeah, I'm speaking for the guys that have been with me for less than 1 year, because as I said, guys that have been with me for more than 1 year, that will be extremely simple to start applying immediately. But if you're not being with me at least 1 year, then it's very important that you take, as for the other strategies, at least 4 months in which you actually study, you follow me, the new video that I publish every day, and you practice on a demo account and learn to apply the strategy, because this, if you learn it, if you master it, this will serve you for the rest of your life. So it's very, very, very important that you master it and that you actually learn the rules.